Welcome to Node Mode. We are back, the NFT podcast on digital art, where we talk with artists, collectors, and reasonably intelligent individuals about all things NFTs. As usual, nothing in this video is financial advice. We're not financial advisors, and the NFT space is risky. So always do your own research, and don't forget to hit the like button, subscribe, and share. Today, we have Spencer Gordon-Sand, the man who started an NFT venture fund and was so confident he just called it Spencer Ventures. What a chat. Spencer, welcome to the show. What's up, man?
No, thanks for having me. It's been too long. I'm a little bit offended that I didn't get the invite earlier, but I appreciate getting on and getting to chat with you.
You're lucky to be here, man. You're lucky to be here. I'm mostly, you actually do have, I know you enjoy art, which is great. But I know that you're not like a huge, like, I'm not investing a ton of money into the NFT art side of the space, right? Which I think is kind of cool because you truly do buy for the art, which is a great thing to do.
Yeah, I mean, so it's an interesting thing, right? Like, I collect a lot of like physical traditional art.
Yeah.
And a lot of my like family are artists. So like this is a space that I've like been in a lot. But I have this like challenge in the NFT space, which is that I like to collect based on aesthetic appeal and just things I enjoy. And I found in the NFT space that that doesn't always have the highest overlap with things that I can make the most money on. And so as a personal collector, it's one thing, but as a fund manager, I have fiduciary responsibility to my investors, right? And so there's a couple of different reasons. I'm happy to get into it more if you'd like in the show. But there are certain times where it's like, wow, I love this art, but I don't know that it's a right fit to buy with a fund where the goal of the fund is financial returns over a certain period of time. And also, like, there's art that I don't particularly enjoy the look of, but I think will go up in price, and that's usually the thing that should be bought more. And so it's kind of an interesting thing to see these art theses play out. But this is not like FUD towards artists at all. This is just like, I think one thing about the NFT space is there's actually like a lot of different subsets of what goes on within it, and finding what you're good at trading and then also finding what brings you joy are like important exercises that don't need to always be the same result.
Yeah, I love that. That's really good. And I think we'll dive deep into that side of things for sure. But first I want to start off with fencing. For those that don't know, like I think you were a pro fencer, right? Or you were into fencing, and you're also a professional photographer of fencers. I gotta hear about what this is all about.
Yeah, so I used to fence competitively. My like greatest achievements was I used to fence for the U.S. in World Cups and Grand Prix. So I used to train and travel with the Olympic team. I was never in the Olympics. I was never close to making the Olympics. And actually, I got into photography because I used to go be at all these tournaments, and the World Cups are 2 days. So usually it's like 300 to 500 people. The top 64 make the second day. And you go and you book your hotel for 2 nights because you don't want to have to like scramble and rebook your flights in case you make the second day. But most of the time, you don't make the second day. And so you get the joy and pleasure of watching your friends who are likely better than you at fencing compete in the second day. And, I thought, well, I'm going to be there anyway. Let me bring a camera, start taking pictures. And one of my training partners was actually sponsored by Red Bull and Nike. And so, they don't always send their own photographers to the events, but I was there anyway. And I actually got the pleasure to work with Nike and Red Bull as a fencing photographer because I was there, had the photography skills, the pictures, and it was mostly like what started as something that I was just kind of doing for the enjoyment of the sport and for my friends. It became sort of like a professional thing for a little while that I was doing.
That's awesome. I mean, I literally know nothing beyond what I've seen like randomly in the Olympics. Like, what kind of cross training do you do? Do you call it like you're like, hey, I'm a fencer, or what do you call yourselves? A fencing specialist?
I mean, you're a fencer, you're an athlete. Like it's just as much athletic as anything else. I think one of the cool things about fencing is that it's a sport that is like, it rewards the mental component a lot. So you have to be very smart tactically, but you also need to be like physically able to accomplish the tactics in your head. And It's also like a sport where different countries have like very distinct different styles. And so it can be really dependent on like which countries you're fencing, which sort of athletes you are. But one thing that I always really enjoyed about it was it's not a sport where you make a ton of money in the sense of like, if you're a really good basketball player, right, you're making hundreds of millions of dollars a year. If you win the Olympics for fencing, like maybe you've made like a couple tens of thousands of dollars, or maybe $100,000 off winning the Olympics. And like there is some sponsorship opportunities, but it's like most people at even a World Cup or Grand Prix are there for love of the sport, are there because they want to, achieve the greatness in the thing that they do. And so, the thing is, at the end of the day, at the end of the competition, you go out and you have this community, you have these friends, you spend time with them. It's sort of like this pursuit of something together is more important than where it ends up. And that was something that I always loved about that community.
That's awesome. So I want to learn about how you went from fencing to managing an NFT fund. There's a bit of a leap there. Go in as much detail or as little as you want, but like that's a really cool transition. Like, yes, I was a competitive fencer, and now I manage an NFT fund.
Yeah, so I have like a weird arc in my life, which is that I like didn't go to college immediately after high school because I was just kind of bumming around and fencing and traveling and competing. And during that time, I did a couple of things to make money. One was that I bought and sold Magic the Gathering trading cards. And so I did a lot of that. And then the other part of what I was doing is I worked at some startup, and I was doing educational technology. We won a few $1 million in contracts with the Department of Education. We went on, we raised venture funding. I got promoted to C-suite. We did that sort of whole arc. And the joke at that company always had been like, we were doing ed tech, but I was uneducated. And so after doing that for a little while, I sort of wrapped up my competitive fencing career and went on to the University of Chicago to study economics. While I was there, I was also sort of had caught this entrepreneurial bug and it wasn't going away. So I was executive about 3 different tech companies, venture-backed 2 of them, sold 1 of them, ran the acquiring company for about 1.5 years. We raised it a very high evaluation from the chairman of MasterCard, amongst others. And I was doing that for a while, got my degree in economics. When pandemic started, I kind of was transitioning, didn't know what I really wanted to do. I was modeled in a music video for fencing and like just kind of wasn't really doing much. And I got agitas. I was like, I got to get back to working. And so I reached out to an investor friend of mine in Chicago who was one of the nicest people I know. His name is Chris Deutsch. He ran a group called Lofty Ventures. I said, hey, Chris, like I want to get back to doing startup-y stuff. Like, is any of your portfolio companies hiring? Like, can I do some advisory work? Like, I don't really know where I want to fit into this ecosystem. And he said, well, my wife is pregnant and we just had a big exit. And I want to redeploy all this capital. Like, can you help me like run Lofty Ventures? And so he and I started working together. We grew a lot of what Lofty Ventures was. We grew a venture syndicate to help accredited investors start investing in early stage companies, and kind of got into like the dark side of the venture of the startup world, which is venture investing, and really fell in love with working with a lot of different founders. Now, funny enough, was during that period of time, I started getting into NFTs because I looked at it. I was like, oh, this is really similar. This is like venture investing, but with trading cards. Like, this makes tons of sense to me. And so it was a combination of like, maybe I was smart or saw things the right way, but I was also very much right place, right time. I was an early investor in Bored Apes, Cool Cats, Artifact was probably my biggest win. Went about like 150x in my personal portfolio in about 8 months in 2021. And I sold about 70% of the portfolio in December. And so that was right around when I was starting to have conversations with people about a fund. I was feeling pretty bearish macroeconomics. Like, I'm not really a day trader, but I do pay a lot of attention to macro. And I was like, like things are really hot. And so people had started like, your performance is so good, let me give you a fund. And I was like very insistent to not start a fund until like after things had cooled off. Like, we were clearly at the top or somewhere in some sort of hype cycle. And so about 5 or 6 months ago at this point was when I started deploying my fund. And so that's been quite a journey on its own. But that's sort of the arc that got towards Spencer Ventures and towards running this NFT fund, was a little bit of trading cards, a little bit of venture, a little bit of investing, and a lot of different sort of interesting people along the way.
So when you pitched this idea of the NFT fund, I mean, what did you tell them? Did you say like, what was your pitch on like, hey, give me this money so I can go buy these digital trading cards,
Yeah. So this is sort of the pitch towards it was a couple of different things. One was like, hey, this is a really interesting thing going on. Like, I think the thing about Web3 is that when you talk to institutional capital, institutional players, people with big assets, right? You start from the point of, okay, if you're managing large amounts of capital, it's pretty reasonable in this day and age to think maybe I need some amount of digital asset exposure. I think a lot of family offices think this is between 1 and 10%, maybe 20%, or up to 50% if you're being like really into it. But like, even if you're like not so sure, right? Now there's a question of like, how do you get the best digital asset exposure? I think a lot of people, and we saw like a lot of people, their answer is, okay, ETH and Bitcoin, right? And those are pretty good answers to this question. And my argument that like a lot of institutional capital went that way is what you see was we saw in like the 2016 cycle, right? Everything went up. Everyone called it a bubble. It went down. They said, I'm right, it's a bubble. Then we got to 2020. It went up again. And now it's not a bubble, it's a cycle, right? And that's when we saw institutional adoption tick up. Why am I saying that institutional adoption ticked up then? Is because you see in 2020 was when suddenly this asset, ETH and Bitcoin, which had been very uncorrelated to the S&P, which is like the public equities, started being highly correlated. Why? Because it was the same people trading it that were trading public equities, right? This is the institutions were coming in. You had algorithmic traders, you had Citadel, you had Rentech, you had all the guys that run these models on like the S&P were starting to run it on ETH and Bitcoin, right? Okay, so this is the concept. Now, if you want digital asset exposure that's anything other than literally just ETH and Bitcoin, it's actually very hard as an institution to figure out how to get access and how to learn about it. And sort of what I pitched my investors on was, okay, look, like anyone who tells you they're an expert in this space is kidding themselves. This space has been around for literally 2 years. Like I'm not an expert. Nobody else is an expert, right? But I have the great opportunity to have been here early, so I know a lot of the players. Let's go on this journey together. I'm going to do what I think is interesting plays, and we're going to talk about it, and I'm going to share as many learnings as possible, right? And so at the very least, you're going to get education here so that you can learn this space. So if this, NFT space had a similar arc, right? NFT space goes up. Everyone says it's a bubble. It goes down. Everyone's like, ha, 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 I'm right. It's a bubble. I'm of the opinion that in the next cycle, we will see things go back up, right? And in that point, it'll be, now it's a cycle, not just a bubble, right? And that's when we see like bigger institutional adoption. But if you're an institution, you want to front run that larger adoption, you see that coming, like the best way to get exposure is to start buying now, right? And start getting exposure, start learning about it, and also start building the relationships to deploy larger amounts of capital.
I like that. And we're just on your site here. I like that you show some of your current holdings. How does it work with some of the people that are I guess they're LPs, right? Like the people that have invested. Do you like send them a monthly update and say like, hey, I've got a bunch of we just bought and sold a bunch of Pudgy Penguins, and let me tell you about this crazy, like why these are worth so much money.
So we're on a monthly cadence. So we have a monthly email update and also a monthly call that I have with all my investors where I just kind of talk about it. I think it's a little bit like what's literally going on in our portfolio, and I gotta update these images. We just added some stuff to the website. So the first two aren't actually our NFTs, but the rest are. We do have a lot of Azuki and a lot of Pudgy Penguins, but not specifically those ones. I don't want people to get upset because I know those ones. I'll email our web designer after this. So we have a monthly call and a monthly newsletter gets sent out to our investors where we chat about things. I also work with several of my investors to help get them access to sort of equity deal flow in the space and also diligence with them. So it kind of depends on what they're looking for. But a big part of this is like just sort of the education component of like what I've noticed is a lot of the institutional capital that plays in the space doesn't really understand it super well. And it's really hard to understand like NFTs unless you're in the weeds day to day doing it, right? So how do I get them that understanding as though they were doing it day to day without them needing to literally, because it's hard. Like I do this all the time. My day, wake up, NFTs, eat, like use the bathroom, sleep, work out occasionally, like more NFTs, right? And like these are the things that I do, but like not everyone has time to do all of that, especially if you're running a fund that does multi-strat, does all sorts of other things. And so like for most of the investors, it sort of depends on what their goals were, but a lot of them were mostly in this to learn.
I like that. Yeah. And like to me, it just makes a lot of sense. I imagine a lot of them are actually kind of excited. Like they're like, oh, now I know something about this crazy space that none of my friends understand. Like, is that like, does it feel like a little tangential benefit to them?
I don't even think it's a tangential benefit. I think it's like a core benefit too. And like one of the biggest things was that, my goal for a lot of the investors was that if they get on a call with a Web3 company, I want the company to feel that they're Web3 native, right? Because this is a big deal too, is in the last bull run, for example, there were all these Web3 venture deals that were really hot and hard to get into, right? And who were the venture investors that were able to get access? Who were the family offices able to put capital into those deals? Well, if you could sit down and you could say, hey, we own, we have some punks. We have this involvement in the space. We kind of know what's going on. We're having an educated conversation. Not only does it help them diligence, it helps them get into a deal,
I like that. That's actually, yeah, that's cool. So I want to get into your mind, because that's what a lot of people I think here are going to want, is think through, how do you make a decision on what you're going to buy, and is it different from the? I imagine it's a little bit different as an institution than as an individual, but I imagine there's a lot of things that apply. But take me through that process of how you make a choice on what you buy and when you decide to sell it.
Yeah, so I think that there's sort of like two independent choices that get made, right? One is, as I mentioned, like I pay a lot of attention to macroeconomics. Where are we with interest rates? What are the expectations around Fed meetings? I think one of the benefits of the NFT space is, as an institution, unlike most other asset classes, you're mostly trading against retail investors. And people in the NFT space don't pay as much attention to macro as they should in general. So a lot of the opportunity comes from like on days where there's negative macro events, like those are good days typically to buy NFTs, right? So in general, I have like two modes in my mind. Like, am I a net buyer of NFTs or am I a net seller of NFTs, right? And that is mostly dictated by macro. A little bit, sometimes it's dictated by NFT specific catalysts. So for example, like, Yuga mints, like it's hard to overstate the impact of Yuga mints on the overall NFT ecosystem. So that can impact it. But a lot of it is just macroeconomic, right? Or like, and not even just vanilla macro, but like even crypto specific. So like I deployed like 60% of my fund in the 3 weeks around when FTX collapsed. And like,
which was this great move, by the way.
Thank you. And like one of the big things is like whenever I look at the market and I'm like, two things. One, only an idiot would be buying NFTs on this day. Like that's probably the day to be that idiot. Is like, when FTX is like, I'm looking at this market and I was watching prices just go down and down and down. I was like, there are zero buyers. There's no price discovery. There's literally, and so being a buyer on days or weeks when there's zero buyers, if you have the ability to hold for longer periods of time and like can tolerate 50% swings, which institutional capital you can, like that's a good time to be deploying, right? Now, if everything's been up for a month, up only, right? Maybe you start selling things back then. Like that's less of a time to be deploying, right? So that's like the first big question is like, am I a net buyer or a net seller? And a lot of it has to do with ETH price too, right? Like when ETH prices run, NFTs tend to go down a little bit. Like, so NFTs have been trading like short ETH volatility recently. So if ETH is range bound for like 3 weeks, that's a great time to start selling NFTs, because if it moves at all, volatility goes up, NFTs will go down in ETH prices, right? And you can often catch the NFTs cheaper. So there's some of this stuff to like look at, if that makes sense.
Yeah, it almost feels like you look at the macro in terms of when to buy, when to sell, and then you're looking obviously at the micro in terms of what you're going to buy. Does that sound right?
Exactly. So this is the other part that is also very, very, very important. Is like you can't just be like, oh yes, I am buying and selling NFTs, right? Like these NFTs matter a lot, which ones you buy and sell. And it also like you have to look for certain opportunities. And a lot of the type of looking that you do depends on how much capital you can allocate, right? Are you going to move the market buying? So like there are some projects that are under a certain size where if I'm buying a project for it to be meaningful size in my fund, like I'm buying 1 to 5% of the project. Like you don't do that in a day. You do that over a couple of weeks, a couple of months even, right? And you're never gonna be able to sell that in a day, right? Like if you ever sell that position, like you sell it over a couple of weeks, couple of months. So in order to feel like so in order to make a bet for like especially a small project, like I need to be very comfortable that this is like a long-term 6 month, 6-year time horizon bet, right? And so this is where like the venture investing mindset comes in. And like the number one thing that I've always learned in venture is you like can never go wrong betting on founders. Great founding team with bad idea is always better than great idea with like questionable founding team, right? And this is because a great founding team will figure it out, make it work. They'll pivot their idea. They're gonna like, wherever it goes. But a team that's not so good will create problems for themselves where there wouldn't have been problems, even if their idea is great.
Yeah. So by the way, do you own anything personally anymore, or is it mostly all fund related?
So I do own some NFTs that are just part of my personal collection. I don't really buy NFTs anymore. I'll exercise mint rights if I have them on the NFTs. I do sell sometimes if I just need some personal liquidity.
Yeah.
But I try and not be a market participant in my personal account because I think that that's in general a conflict of interest to the fund account.
Yeah, that makes sense. And when you buy, like you mentioned, like longer term holds, what is your outlook as a fund? And I guess, may as well translate it to an individual as well. Like, is it 6 months? You mentioned 6 months to 6 years. Do you have varying kind of time frames for different projects, or overall, are you like, yeah, in about 5 years, I'm going to return this whole thing to all my investors and call it good?
So yeah, so I mean, the way that I trade is a little bit strange, and it has to do with, and it's a strategy that you like kind of can't run without like bigger amounts of capital, but it's both, right? So what I like to do is I like to sit in positions for long periods of time, but I like to buy down my cost basis as much as possible, right? And so the way that I do that is when I invest in a project, I like to buy its size, 1%, 2%, 5% of that project. You know, if it's a higher market cap project, I'm not buying, you know, that percent of like a 100 ETH NFT, but 5, 6, 7. And the way that I look at it is like, okay, if you have a 2x, you take maybe 20, 30% off the table, buy down your cost basis. Now your total cost basis for the whole position is a third, but you still own 2/3 of the whole thing, right? And so that way, like I feel much more comfortable sitting in a position where it's basically the house's money, right? So
Yeah.
usually if a project that I'm holding is 2x, 3x, 4x, like I'll have sold 50, 60%, 30% on the way, so that I've at least recovered my principal, right? And that way, like at the end of the day, I'm sat in a long portfolio in a long position. And hopefully I've had a good entry price, low cost basis. But within the first couple of months, couple of weeks, if I'm able to realize, like, and I think this is where a lot of fund managers get confused, right? Because the venture model is like you never sell anything, right? Until it's like 100 or 1,000x. The stock market model is as soon as it goes up 5%, you just sell it, right? And so the beauty of NFTs for me is that it has the returns profile of private equity or venture capital. So like you can get 100x's, 1,000x's in NFTs, whereas you probably can't really do that in the stock market, right? But you have liquidity of the stock market. Like you can't, as a venture fund, practically sell a third of your position is really hard. And actually, it's funny. So when I was doing venture work, I had for a period of time was really stuck on this idea of like really early stage venture investors. And I did a lot of like modeling with like Monte Carlo simulations around this, and like the data available that I had was like, if you as a like pre-seed or seed venture investor sold 50% or 30% of your equity at Series A or Series B to later stage funds as secondary shares, you'd return like 30 to 50% better than if you didn't, because the risk at those stages, like you're just like the multiples are very high, but like the risk is so high at early stages that it's a different profile. But it's practically kind of hard to do that, right? Especially at size. But like NFTs, like you can take liquidity whenever you want in a position, which is great. And it's like, you're not dumping your bags to like wreck a project. It's like, okay, over a couple of weeks, one a day, one every 2 days, 3 days, like you can trim back positions, and I think, again, a lot of crypto fund managers in the last cycle didn't do this. When you're up 100%, take 10% off. That means you've 10x'd, right? Like, sorry, when you're up 100x, take 10% off. It means you've 10x'd. Like, no fund is beating a 10x in general. Like, you're the best fund manager. And so this is like a big thing too, is like, we're in such a risky asset class. Any opportunity you have to buy down your own risk is like really good.
I love that mentality. And I think I know the answer to this, but I want to hear it from you anyway. When you sell an NFT, do you just like leave it in ETH, or do you go straight to USD?
I mostly go straight to USD. Occasionally I'll leave some of it in ETH. This is like partially how I think about taxes, but also partially about how my fund is structured and paying distributions. So I actually like pay distributions out to my investors when we sell things at a profit. So we paid about 12.9% of committed capital back to investors already in the first 5 months of the fund, with an average return of 108% on the sale of those NFTs.
Yeah, they're pretty happy about that one, dude. Let's you keep that going. It's they're just gonna be throwing money at you, man.
Yeah, I mean, and so like sometimes like in like a month ago, like we sold a bunch of NFTs and left it in ETH but that was like two separate trades, right? Like that was selling NFTs because ETH had been range bound like through early January from like mid-December in like the 1200s, right? And so NFTs and range bound ETH, when volatility is low, do really well, right? And so that's when mutants hit like 20 ETH, and it was like at this point I actually just want more ETH. Like I'm selling NFTs because they're high, but I'm buying ETH because it's low, right? And so you always take 20 to 40% off for like tax purposes, because you never ever want to be like caught in a position where you can't pay your taxes. So that's like the first thing, is like straight to stables, 20% always. Then it's like I leave a little bit for like 3 weeks. That's when ETH went to like 1,500. It's like, cool, we're selling that ETH stables. That's getting paid out as distributions again to the investors.
I love that. And so we've talked about like your macro kind of thesis, and I want to dive in more on the micro side in terms of what you look for in a project, into why you're deciding to buy a specific NFT. Can you take us through that kind of thought process? You mentioned the founding team, but I want to go a little deeper.
Yeah, so like there's couple of things. So like one is that I look and I say, okay, whenever I buy into a project, like I need to have a thesis on that project, which is that like if the NFT space, the best use case is X, then like this project is the best like exposure to that thesis, right? And so, for example, like Pudgy Penguins, huge investment of mine, one of my best plays, right? We bought a ton of Pudgy Penguins in the recus around FTX. Why? Okay, let's look at the founder, right? Founder, Luca, younger guy. He was like dropped out of high school at 16, worked at like a company that got acquired by like Microsoft. He was like the 7th employee, left that, was a CMO of a D2C business called Gel Blaster that did $200 million in revenue last year in Walmart. Left that company. Then he went and bought Pudgy Penguins, right? And so he's, first of all, I like that he bought the project. I think that's a good like sort of savior arc story. The community can rally behind him, right? But then like, what's he trying to do with the project? He's building like IP rights marketplace, and he's going to license the IP from his holders to sell CPG products in stores. He's a great founder fit because he's done this before. Like he's got this track record of selling products in Walmart. Fantastic, right? But also like he's building an IP rights marketplace. Now, if I'm going to say one of my theses on NFTs is that NFTs are about the IP rights you get for holding an NFT, right? We see this with, Bored Apes, you get the IP rights. Punks, you get the IP rights. Like this was a big thing in the last cycle. If I want exposure to the thesis, the best use case for NFTs is this IP rights transfer concept. I think Pudgy Penguins is the best exposure to that thesis, right? And this is like, I think, a really important exercise, because what are NFTs? What do they do? Well, we don't really know the best use case for NFTs, right? Like some people use them as digital art. That's probably the most obvious thing, right? Some people use them as membership access tokens to like country clubs, essentially. But like a lot of this is just, there's a bunch of companies out there. Maybe their video game assets is the best use. Like, I don't know, right? But like within each of these different theses, like I think some will be correct, some will not be correct. And how do I get exposure to correctness, right? Because you never want to be in an NFT project because like, oh, like it's a good project, but like it's not the best. Like you always only want the best, I think, for your thesis.
I love that mentality. And you know what's interesting is I apply that myself to art. Is like, hey, does this artist, it's like X copy, he owns the glitch art, right? Like he almost is like the father of it. And so like that whole niche belongs to him. Like, and it's okay. Maybe you can find some good wins, second or third or fourth or fifth artist that's doing a great job in that category. But it's like, why do you think Grant Yun is doing so well? Because he just is owning this like neo-precisionism category. And I mean, however you want to call it, but like you see his work and you're like, anything that feels minimalistic, you're thinking of Grant Yun. And it's like, he wasn't the first one to do this, but from the digital side and NFTs, very much so, right? And he took a lot of inspiration from trad art, which is great, but he made it his own and he like completely owns that space. So I totally agree with you.
Yeah, I mean, and like think about this too, right? Like, for example, generative art. Like I think there's sort of like two arguments for who this is in generative art. Like it's either Snowfro, so like your exposure is chromey squiggles, like that's like the godfather of generative art, right? Or it's Fidenzas, right? Or maybe QQL. Like those are, I think, the three, like, if you're like, to me at least, if I'm like, okay, the best use case for NFTs, generative art, like those would be the three and only three projects I'm looking for exposure to generative art in, right?
Interesting. Yeah. I mean, I like the overall, I think for me, the category is broad enough, right? That maybe you have enough, but I do think that like, those are very good places that like if I were to place a bet, like that's where they would be, right? And what's interesting is a lot of those bets, they're already kind of showing, they're showing where they are based on their price. So you got Fidenzas and ringers and autoglyphs and squiggles, like all those are right up there and they're not moving. Like they're very, very high price points and people have kind of coalesced around the value there. So yeah, definitely interesting. Okay. So you talked about the owning. Okay. We have number one, founding team. Like you gotta be in love with them, you know their history. Number two, do they own basically like their use case or vertical or niche, whatever you want to call it. What else you got for me?
Yeah. So, well, I think there's two things. One is, and this is sort of like not in the format of that question, but I'm going to say it anyway. One thing here is like, I think when you want to look at an NFT project, you want to say, okay, am I using this NFT project for like indexed exposure to NFTs overall, right? So do I want to just, one thesis you can have here is the NFT market is oversold, right? We're down 90% in USD prices from all-time highs, basically across the board. One thing you could say is, okay, we're down 90%. I'm going to make 10 bets. If 2 of those 10 bets return to all-time highs, I have 2x in my portfolio. That's a very reasonable approach, right? And some stuff. So I think of like, for me, the creme de la creme of this is punks, right? Like punks, I think in general, just kind of move with the NFT space, right? The percentage of the total NFT space that is punks, I don't think changes that much very often. Now, that caps their upside a lot, right? So like in order for punks to really gain a lot in price, the whole crypto, the whole NFT space, the whole macros need to change. Now, I think it's reasonable to make a bet on that, but like be very clear what you're making a bet on, right? No one's going to wake up and be like, oh my goodness, I didn't realize punks were as cool as they are. Like they're just punks, right? Everyone knows them. So like there's no like discovery that happens. Now, another type of investment you can make is I think this project will grow as a percentage of the total NFT pie, right? And so this is your much riskier bet. This product, because most of those products that could grow as an NFT pie, like by their nature, could also go exactly to zero, right? Whereas punks, if they're going to zero, like there's bigger issues going on in the whole crypto market, right? And so like this is where something like Pudgy Penguins, when Pudgy Penguins was sitting at like 2 to 3 ETH, like there is room for Pudgy Penguins to move up to the 7 ETH range, to the 15 ETH range, right? Like I think right now, if you look, what's the biggest 2 projects outside of the Yuga ecosystem is like Azuki and Clonex by market cap, right? So Clonex, like combined market cap, they're about 12 ETH floor essentially because there's 20,000, maybe 10,000. Azuki, they're sitting at like 13, 14 ETH. I think any project in like the 2 to 3 ETH range that has a 10K supply will have problems getting above the Azuki market cap because like it just feels like that's kind of where the allocation in the markets are, right? But they could definitely, like there's no reason that one project is 5 ETH or 7 ETH versus 2 ETH versus 15 ETH, right? Like within that range, there's a lot more opportunity for movement. So like that's one thing where I look, I'm like, okay, those are the plays that I think have much higher volatility and higher upside, but they also tend to carry bigger downside risk, which is why they're priced lower.
Yeah, I really like the way you frame that. And that actually reaffirms, I just tweeted, maybe it was yesterday, like I didn't know why I tweeted it, but now I do, is because of what you said, which is that punks will, as soon as punks start ripping, that's when I know that like the bull market really is back. Like, and that's going to be my indicator. If punks start moving up, like that means like, hey, something big is happening here overall. And like, we're in a good spot market wide. Would you agree with that? Or you think there's a little more nuance to it?
Yeah, I mean, who knows, right? Like someone could come in tomorrow and just buy $20 million worth of punks. Like that wouldn't shock me. That's not like a crazy plan. Like there were people who would do that. That used to be like 10 punks. Now that's like a lot of punks, right? And so, like the thing about punks specifically is you look at the buyers, the wallets often go like USDC to ETH to punks, right? It's just someone waiting to get NFT exposure. Their play is punks, right? But again, like in a world where punks go up a lot, like that's when you really see the opportunities for these smaller projects because the upside is no longer really capped, right? And this could change. Like I think there's a couple of projects. I think the ones that are floating in this range, I think Azuki, potentially Clonex. Like there are some projects, probably the closest I would say right now is Azuki, that like Azuki could break out, right? Azuki could push what the upper envelope is. But for another smaller project to break out above Azuki, I think they have to first get into Azuki tier, right? And Azuki's been in that tier for like many months, right? So that's why they've established space, like they can move more. But just getting there is hard for other projects, but possible. Above them, I don't really know.
Yeah. I love the way that you're kind of framing things too, in terms of, hey, does this, do we need a net new something has to happen in order for this to break out? Or can you just move between the tiers, which has already been well established between, the blue chip PFPs and then the new guys, right? So
yeah,
very, very interesting. So I want to get your take on like the current environment. Like, what do you think? I suppose let's start with just macro in general. Like, I mean, I imagine you are talking to your investors all the time, and you have to say, okay, the bear market is still here. I mean, there's still lots of stuff, good things happening, but like, how long are we going to be going sideways, relatively range bound with ETH and BTC? And then when do you think the next like mega bull run comes around?
Yeah. Okay. So like everything we're doing now is just like a play on one very specific thing, which is when we have forward guidance from the Fed that interest rates will no longer increase, and when will we have forward guidance that they may start to decrease, right? And this is why we see when the Fed is like, maybe we're going to slow the pace of but like consensus is right now, the Fed will keep raising interest rates. They're probably trying to induce a recession, right? So there isn't like, technically, formally, we're not in a recession, although in crypto, it certainly feels like we are, right? Like the thing about recessions is that as soon as we actually are in a recession, that's incredibly bullish, right? Because that means that eventually you have to go from constrictive monetary policy to expansionary monetary policy. I think that the assets you want to be in, the day that they're like, okay, we're no longer raising rates, or like, okay, now we're decreasing rates, like you want to be in punks and ETH and NFTs. Like, to me, that feels like a great asset class to be in, right? Because that's when, okay, maybe they're like just sentiment will be overall better. Now, where are we today? How far out is that? I don't know, right? We don't know for sure. I think people are a little overly optimistic today about how soon that is. I think if you listen to Jerome Powell speak, like he has been very clear, like they're trying to push the economy down. The reason that things have run kind of recently is people have started pricing in this scenario where there isn't this formal recession, where the job market changes, kind of cause things to slow down. We see like increases in the price like basket of like the CPI come down, right? So essentially, usually what happens is when the Fed increases interest rates, right, like prices come down. Now that takes time to happen. We've started to see it, and that was like in December, the big news, right, was like, okay, prices have kind of started to come down, or even have just like slowed their rate of increase, right? And so this is like we're seeing an impact from this policy is doing something. Right now, obviously, this is because inflation was just obscenely out of control, right? And so, like, they had to start being constrictive. I think it's actually net hugely positive for the U.S. for everything that the Fed is doing this, right? Like, the Fed caused a big problem, and now they're solving it by restricting monetary policy. So, is there some sort of hopium in the economy that it happens sooner than a year? I think so. But if I were to make a bet, like, I think it's a little bit like naive to think that there's going to be this sort of economic turn in the next, like by the end of this calendar year. Like it's a solid, I think, like 12 to 18 months until we see the beginnings of a recovery. It could be even longer, right? Like the thing that people don't realize about crypto is crypto's not really ever been through a macroeconomic cycle, right? In the past, crypto cycles have been crypto specific cycles, right? So so the period of 2008 till like a few months ago was just up only in the stock market because there was just free money for like, 12 years. That period of time is inclusive of the entirety of the period of time that like crypto has been traded, right? And so this is the first time that the crypto like crash was caused by like an everything crash. And so it'll be interesting to see. I think this will also be the first time that a crypto recovery is caused by an everything recovery, right? Or actually, it won't be the first time because that happened in 2022, in 2020, right? And as we said, like these are just highly correlated with extra volatility. So like this is a long-winded answer to your question, but I think if you're looking for exposure in the next like 18 months is like kind of the time to be looking to enter positions. Where within those 18 months, like I don't know, nobody knows, right?
Yeah, and it feels like there's not necessarily any huge rush, and I think it's wise to think that way, right? It just like while the markets overall, like, look, I'm so bullish. I think that ETH is going to hit 15K at some point. So I'm like, well, you should be okay buying it at 1600 or at 1400 or at 1200. Like, who the f cares? Like, this is all very reasonable prices if you're that long. But I would agree with you. Like lately in the NFT space, everybody's been, and we're recording this on January 26, 2023. Like the last few weeks, everyone's like, dude, we're back. And I'm like, yeah, we're kind of back in some ways. Like the market, my thesis was that like the NFT market wouldn't die because it's just too exciting and fun. But like the bull market, we're a year out, you know? So like at least let's just like try and, you know, maintain sanity here for the next year and get by until that time comes. So it's interesting that you share that same kind of thought process, and so does, you know, my idle DC investor is like, you know, 12 to 18 months sounds very, very reasonable to him from now. You know, a lot of people I think are getting a little over eager perhaps, but yeah, I mean, we'll see.
Yeah, and like I think, but like this is the expectation, right? And like this is the thing that I think a lot of people who are trading, who are like retail investors, don't realize is that like institutional investors price in a lot of different possibilities. So the thing is, if the Fed comes out and they're like, "Hey guys, like we were being too aggressive, like time to slow increasing rates, like maybe we'll just like not, you know," if that happens, like we go to Valhalla, right? We go so far up because like the expectation is that's like a 2% chance, right? But pricing that in at a 2% chance, a 2% chance of like a 3x on something like that, like moves up the price. And so I think a lot of people get caught in like institutional investors that are trading ETH, like pricing in these very high upside, low probability events, and that could push ETH up like $100, right? But like where 90% or 95% or 99% expectation is that this will not happen, right? And so then everyone's like, "Oh my goodness, like it ran, but it was this fake out rally or whatever." Like, no, it's just like institutional investors are getting their exposure to this really big downside, like very unlikely event via this highly volatile asset, right?
Yeah. Okay, so I eventually want to get to some predictions because everybody loves predictions, whether we're right or they're wrong. Everybody loves when we make them. So I want you to think about, you know, 2023, you know, end of 2023 predictions. But before we go there, what are you looking at right now? Everybody likes to know, like, hey, what are we looking at in the market? Like, what projects are interesting to you? What NFTs have you, you know, maybe you've recently purchased or you're considering purchasing? We all want to be able to front run the institution, which is you. So help us do that, huh?
So I'm not going to do that. I'm going to tell you a little bit of what I already had bought. But no, so there's a couple of things, right? So some products that I'm just generally looking at right now that I don't own any of are, I'm very curious how the youth's transition to ETH and Polygon will go. I think that'll be a big moment for the NFT space in general of like what happens when you go cross-chain. You know, we saw little Pudgies go cross-chain before. Kenpai Pandas do this too. I just don't know what happens, but it's going to be interesting in the NFT space. Like that's interesting to me. A project that I do have a bunch of exposure to is Digidaigaku's. I mean, they're doing their live mint at the Super Bowl. Like that's like Gabe and Limit Break. Like they have $200 million. They're one of the most well-capitalized companies in the space, period. Like on par with like Yuga and Pixel Vault for capitalization, right? They're doing a freaking Super Bowl ad with NFTs that you can live mint. Like that's huge. What are the impact on the rest of the NFT space that's going to have? I don't know. What's the impact that's going to have on their assets? Like I also don't know. But I think a lot of people miss Digis or like don't look at them right, especially because there's such low supply. But there's also a question of like, how does the big, large millions of people mint impact the 2000 supply collection? I don't know. We'll have to see. Another one that I have big exposure to that I'm excited for is I'm really excited for Moonbirds Mythics. I think Proof has had some challenges on comms, and but they're also a well-funded team. They have all the resources you could ever want, and so like I do like looking at projects that have missed the mark on a certain number of things, but have this comeback story potential, because that's where people's like if Proof wants to command attention of the whole NFT space for a period of time, they can, right? It's just that simple. And so like, you know, always look at like, because one of the biggest challenges I've seen projects that like do cool stuff, but nobody cares because nobody's paying attention, right? And a lot of this space is like attention economy. And so if Proof can do cool things, like people will pay attention. And so I really like the art of Moonbirds Mythics that they spoiled. I obviously have huge exposure to this. So, but that's something that I'm watching to see how it plays out. Because I think it's a project that like isn't in its heyday today, but like could have this great redemption arc.
Yeah, absolutely. And for those that don't know, I mean, the oddities are a big part of that play, right? So it's like the oddities, I think you'll have to burn an oddity to get a mythic, right? Or something like that.
You have to burn an oddity to get a mythic, or nested Moonbirds randomly get one. 25 oddities burned per day, a total at most. So in 25 Moonbirds, there's 50 supply released per day.
Interesting. Yeah. And when is that? Do you know when that's supposed to start? Is it coming up soon?
They said Q1. I don't think they've said dates within Q1, but we're like midway through the first month of Q1. I mean, we're almost done, so we're like a third of the way down there. So it's coming in the next 2 months.
Yeah. Yeah. I like that. I think it's an interesting play as well. Like, I mean, I obviously rep a Moonbird as my profile pick. I like the, and honestly, like I'm part of that community because I really do like I identify a lot with a lot of the people in that crowd and love Kevin Rose. And man, I'm just like gutted that he lost so many freaking NFTs. Like it's super scary. So, I mean, I liked what you shared this morning on the morning show of just like best security practices. And really, the one true best security practice is to actually have a vault that you don't touch, like that you don't sign things from. Like having a vault with a hardware wallet that you don't sign things from is going to be like, in my opinion, your best form of security. But I mean, I know that you had a lot of other thoughts to share, which I think is really valuable for people to think about.
So I have a little bit of a contrarian view on this, is that I actually don't love this vault idea, because I think a lot of people like have their vault and it gives them this false sense of security, because the truth is like most NFTs, and I hope we move away from this, but in today's world, a lot of NFTs require you signing transactions with the NFT in your wallet. And like, if you have this vault where you have to send things in and out, like this is probably the best security practice, but like what happens is people have one vault, and that is like, I think across the board, a terrible idea. Like you really, like it's way more secure to have every NFT that's over a certain amount just in a different wallet. Like you can get a ledger, you can set up like 30, I think 40 wallets on one ledger, right? And so like, rather than transferring it in and out every time you have to sign a transaction, are you really going to do that? Are you going to rush to do it when gas is, $120 or whatever? Like people are like, I think like you have to accept that you're a human, right? And you're going to do something like, that is a little lazy. There's also all these times where like there's an airdrop based on like your activity in a wallet, and like, okay, are you going to claim the airdrop with your soft wallet, with your vault wallet? Like you're going to interact with the contract at some point with that, right? So if you accept, okay, you're going to interact with the contract, you have to always, and like this is kind of how I approach things. Any contract I sign, no matter how confident I am, no matter how much I've checked, I'm assuming there's like some percent that's not zero chance that this is a draining function, right? And so, because the truth is, someone can spoof Wallet Connect. There's tons of ways. If someone really wants to drain your wallet, they can. And so, like, how do you limit risk? If you're assuming any transaction you can sign might be, because like, the equilibrium amount of like exploits to your accounts. Like, luckily, I haven't had any, right? But I'm assuming it's going to happen at some point, and it can't be like, oh my god, this is the end of the world if one exploit happens, because you're operating the NFT space. It's the Wild West. It's going to happen at some point, and you have to operate under this assumption that it will happen to you at least once. And so under that assumption, just spreading valuable assets across wallets is like really important.
I love that idea for sure. And I think the one thing that I think we're going to get there as a space is using something like Delegate Cash, where it's like, look, I personally, I'm just not going to sign anything that's not like, if they're not, use Delegate Cash, please, right? Like any project, it's just like, look, let me delegate this hot wallet or whatever, it could be another cold wallet, whatever, but just like a different wallet to sign and do the airdrops from. And like, DC, it's a lot easier if you just hold Pure Art, because they really don't have to do anything. And he doesn't. He's like, I just won't sign. I won't claim the airdrop, because he's in a position where he doesn't need to. He's got like an 8-figure portfolio of NFTs, and he's like, it's not worth the risk. I'm not claiming it. What's that?
But Kevin's exploit was him claiming 6529 meme cards. It was him claiming art. So
true, but it was claiming something, right? And it's like, I think knowing that and trying to make sure that you're aware, super valuable. Okay, so we're running out of time, but I want to get your predictions for 2023. Give me a few. What do you think happens at the end of 2023? Where right now we're 12 months out. In a year from now, what does everything look like?
Some things will go up and others will go down.
And that was a 100% perfect prediction. I love it.
We love a good tautology as an answer to that kind of question. I mean, look, like if I had a crystal ball, like the things would be much better than they are. Things are very good, but they would be much better than they were if I had a crystal ball. I think that there will be at least one really large project that just goes close to actual zero. Then it will shock people, right? We've had like for the last year, the top like 10 projects haven't really changed, right? Like maybe Pudgy's has entered this top 10 range. Maybe there's a few that have fallen out, but like you've got like Azuki, Doodles, Moonbirds, right? Like Punks, Apes. Like I think that what we'll see is like who's really building for the next bull run, who has challenges that we don't even know about yet, right? Like there's all these different things. And I also think that I'm curious to see if we'll see a net new project enter those top ranks, because we really haven't, right? Like some of the top projects have been just derivative projects, right? Which is not to say anything bad about derivative projects, but like they're hard to flip their original, right? Is Valhalla going to flip Azuki?
No.
I don't know, right? Is our Mutant Hound Collars going to flip the Bored Ape Kennel Club? I don't know, right? But these are like the top projects. And so, I think like, what are we looking at in the market that's going to do well? Maybe the market is just frozen until there's another bull run. And like some of the best builders are waiting to launch their projects until then. I think that's a reasonable thesis, right? But it's not obvious to me what's going to happen or if there's going to be any big movement. I expect there will be one project, maybe two. Pudgy's is I think the closest to have done this so far, but they're not really a net new project. They're an acquired project.
Yeah.
Right. I also think that we will see more M&A of projects that were once popular. And so like, it's also a reasonable thing to look at like formerly rugged projects that may be sold. We'll have to just see.
Yeah. I like those predictions for sure. Man, this has been great. Everybody can follow. You got Spencer's Twitter handle here. You can check him out. Before we end, I want you to leave us with any advice you'd give to somebody new to the space, or just general rules to live by for getting involved in NFTs.
Yeah, I mean, this is very, very volatile. Like, this is also like everything that happens in this space is experimentation, right? Nobody's an expert. If anyone tells you they're an NFT Web3 expert, just run for the hills, run for wherever you can run to, right? Like, this is just not a real thing. This has existed for like literally 2 years, right? And the first year of those 2 years was just up only on everything. So everyone looked like a genius, right? And so like, if you come into this space, never put more capital in that you can afford to lose, right? Like if this is more than 5-10%, and if it becomes more than you're comfortable losing, sell some of it and put it into cash, right? Like you can never go broke taking profits. And so my advice to everyone would just be like, enter this space, realizing that you need to wake up and learn every day, and listen to the people who are most upfront that they're the ones doing that, right? You're going to hear a lot of people pontificate about like, I'm like, sure this is going to happen, or like, must be the thing, or like, pay for my gated Discord or whatever. Like, I mean, okay, like some of those people have good thoughts, but like the truth of the matter is we don't know what the best use case of NFTs is. We don't know what the future of NFTs look like. The SEC could come out tomorrow, say, hey, these are all securities, like, and everything goes like close to zero, right? Like there's all these radical things, right? And expect 50-70% swings in ETH and the underlying asset, right? Like if you're not comfortable, like with if you have material impact to your life for an NFT going down 70%, like you should not be owning that NFT. Convert to stables immediately. And I know that like that sounds like really pessimistic, but this happened, right? Like, and I know tons of people who this was really bad for. And not only did it happen once, but the day FTX collapsed, it happened again, right? Like this happened multiple, and you know what? It's going to happen again. Exactly why? I don't know. But do you think that crypto companies are done shitting the bed? No, of course not, right? Like we had BlockFi, we had FTX, we had Gemini. Is DCG going down? We had, all these things. We had 3 Arrows Capital. We had, like if you had asked me 6 months ago when I started my fund, did I think FTX was going to collapse? I'd be like, no, of course not. It's FTX, right?
Yeah, they're like the big dogs. Yeah.
But is it so shocking that a crypto platform collapsed? Like, no, this stuff happens all the time in crypto. It's not a bug. I mean, it's a bug, but it's not really a bug. It's a feature, right? And so if you're trading, like, it's easy to get really into the weeds of day to day and too focused on NFTs. Take a step back, right? The best traders don't trade for like 6 months sometimes, right? Just sit in cash. That's totally fine, right? You don't need to buy ETH wherever. You don't need to do whatever, right? Like, wait, ETH was 1,800 like 5 days before FTX collapsed, and then it went to 1,100. That's like a 50% swing, right? Like that is significant. And also, like, another thing too, this is just like, I'll just keep ranting until we're at the hour. But
keep going, man. Yeah, like you got the advice. We're here to listen. The
thing here too is, like, if you have a portfolio that's like 100% NFTs, like 0% ETH, 0% stables, I think you're probably doing it wrong. Like, have some stables, have some ETH, has some NFTs. Because the best position to be in, like where I feel the most comfortable, is when ETH goes down and I'm like, great, I can just buy some more, right? ETH goes up, I'm like, great, I have some ETH. Like these are both good things, right? And so like, your cost basis on your ETH will never be the price of ETH the day that it happens. It'll be a little bit up, it'll be a little bit down. But think about how can you limit the volatility? If you're trading NFTs with the ETH, try and limit your volatility on the ETH, right? And like, how do you like it's really easy in NFTs to be accidentally super leveraged and not even literally using leverage, which I think you should not do at all in the NFT space. I'm like big anti NFT-fi person, yeah. But like if ETH runs up 50%, does that mean that your NFTs go down 50%, right? Then the way to hedge that is have some ETH and have fewer NFTs, right? Like make it so that if ETH goes up, it's good for you. And also if ETH goes down, it's good for you, right? And like, I think too, the thing that people should be thinking about right now in the market is like, where do you fit in, right? You're here, you're talking about it, you're listening to this podcast. Like the large value to you, like maybe it's trading, but usually it's not. Usually the value to you of being in the space now is building, is relationship building, is being that expert, is being that person in the next bull run. So like, if you believe there's adoption in the space that will make your bags go up, that means you believe there's adoption in the space that will also make the opportunities available to you go up, right? And so like, where do you want to fit in, right? What's the role you want to play? Do you want to make content like Node does? Do you want to trade? Do you want to collect art? Like where in this ecosystem you want to fit in? And you don't need the answer, but like, this is the time, play around. Like everyone who was here during the bull run that like magically left when it wasn't so hot, like this is the opportunity, the bigger opportunity now, besides financial opportunity, right? There's trading, people will be better or worse at trading than you, whatever, right? But the big opportunity now is when you go and you go to a conference, you go to a room, like conferences that have like 100 people attend them, right? It's the 100 most important people in NFTs. In the bull run, to be in the room with 100, like you couldn't. There'd be thousands of people. Right now, you see these things, it's like there's literally like hundreds, tens of people in these rooms. Like it's just the people on the stage. There's 5 people in the audience. Like that's the time to be at the conference. Don't see that and be like, don't come. If you're long this space, if you want professional, personal exposure to it, like that's the time to be building those relationships. That's the time to be like meeting the people, talking to people. It's so much easier now than it was in the bull run when everything was like, oh, I can't go because I have to do this airdrop claim thing up 50%, blah, 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 like, right? It's just like, if you were like very focused then and like totally ignoring it now, then you're not like, I don't think you're really in this space for the long run, right? You're going to be buying the top again and having to sell the bottom.
I love it. Great advice, my friend. And I totally agree, like on the ETH part too. Right now in the bear market, it gets easy to think like, well, I'm just going to keep trading my way and use up all my ETH because this is what's happening. But like all in all, well over half of you, and I'm probably including myself here, we're better off just holding ETH, like, and just sitting in it and not touching it. I know it's not as exciting, but like that, I literally forced myself to just like set aside some ETH. I put it on like it's in a cold wallet, and I like, made a whole show of it. I like wrapped it in a little piece of Velcro. Like, of course I can open it up when I want, but I like wrote a note on it and said, don't open it until ETH is like at 15K. Did
you stake it?
I'm actually not even going to stake that. I know that it sounds silly, but I'm probably going to stake some other ETH. I may eventually end up staking a little bit of it, but what I like the optionality of just being like, look, it's just liquid. I'm not going to do anything with it. And like leave it there and like not allowed to touch it, like literally not allowed to touch it. And I think I'm going to be happy about that in, 3 years. And hopefully I'm not wrong. And if I am, our whole crypto thesis was off. I should stake it. I know. I've thought about it. I like the simplicity of like not even just having pure liquid. And I know there's like, look, I've messed around with Lido and Rocket Pool and stuff like that. I would prefer to run my own node eventually, right? But like that's
it's
also
in your name.
It is my name. I know. I need to actually like.
Deepak doesn't have a node.
I know. I'm probably going to set aside 32 ETH and run a node just so I can say it because I want to. But it's like not exactly for the non-techie guy like me that likes to just chat about things on podcasts. So we'll figure it out. But yeah, huge. Great advice. Really appreciate the time, Spencer. Everybody go follow him on Twitter. You can check out his portfolio. One day, my goal is to be like Spencer. We'll all be better off for it. Another episode of Node Mode in the books. Thank you, everyone. We will catch you next week.